Hey guys, welcome back to my channel. Today's video will be a tutorial on how to identify support and resistance levels in stock charts. Support and resistance are key concepts when it comes to chart technical analysis. In this video, I'll be sharing with you 4 different types of support and resistance. Whether you're a long-term investor or just a beginner starting out on investing, being able to identify key support and resistance levels in a stock chart will definitely be very useful in helping you to determine the right price levels to purchase your stocks. I hope you'll find this video useful, so let's get started. Support and resistance are price levels where the stock price will face significant barriers when it is trying to move past these price levels in a certain direction. For the resistance level, this is usually where the stock finds it difficult to move higher beyond this price level, simply because there are more sellers than buyers at this price level. And because there are more sellers than buyers, this is pushing the price downward, preventing the stock from going any higher. And hence, this is called the resistance level. If you look at the chart of Adobe over here, there is a very clear resistance at around $24. Every time the stock touches this price level, it gets rejected and the price will reverse back down again. It tried to break this level not once, not twice, but a total of 4 times, and it still wasn't able to break past this level. Therefore, this price level of around $24 is a very strong resistance level. For the support level, it is the direct opposite, where the stock finds it difficult to move lower beyond this price level because there are more buyers than sellers at the price level, and that is supporting the price, preventing the stock from going any lower. And hence, this is called the support level. So for the Adobe chart, there is a very clear support level at around the $20 price. Every time the price touches this level, it will be rejected and rebound back up again. So in this case, it tried to break this key support level a total of 5 times, and it eventually managed to break the support level on the 5th try, sending the stock price below the support level. One thing you'll also realize is that even though I have drawn the support and resistance level as a single horizontal line, the resistance or support level is actually not a specific price per se, but it is more like a price zone or region. So for the case of Adobe, the resistance is at or around $24. Every time the price reaches around this price level, the price will reverse downwards. As long as the horizontal line cuts through at least 3 points on the chart, it can be considered as a resistance or support level. It doesn't really matter if it cuts through the tail or the body of the candle. Just use your judgment to find the best fit horizontal line that cuts through as many candlesticks as possible. The more points it cuts through, the stronger the resistance and support level, because it shows that the price tried to break this level multiple times but was rejected each time. The second type of support and resistance is the trendline support and resistance. Instead of the typical horizontal line seen in the earlier example, the support and resistance lines can be either trending upwards or downwards. In the case of this S&P 500 chart, you can see that the support and resistance lines are trending upwards. Similar to the earlier example, to draw the support and resistance trend line, simply find the best fit line that cuts through as many candlesticks as possible. So for this chart, the S&P 500 tested the trendline support a total of 5 times, and it got rejected each time. And on the other hand, the trendline resistance was tested a total of 6 times, and it managed to break through on the 6th try, sending the price way higher. So this is a very typical example of a trendline support and resistance. The third type of support and resistance level is known as the moving average support and resistance. As the name suggests, it is making use of the moving averages to identify key support and resistance levels. You will find that many of the stocks have key support levels at these moving averages, especially when it comes to a major sell-off or a correction in the market like what we have seen in March 2020. So the 4 commonly used moving averages are the 50 days, 100 days, 150 days, and 200 days simple moving average. The 50 days simple moving average line you see in dark blue is calculated using the average of the close of the last 50 trading days. And for the 100 days simple moving average, it will be the average of the close of the last 100 trading days. So for this particular SPY chart, you can see that the 50 days moving average support level was tested quite a number of times. It tested once here and bounced right off, the second time here and bounced off again, the third time here, and at the fourth time, the 50 days moving average support level was struggling to hold, and it eventually broke down and found support at the 100 days moving average before bouncing back up higher. It tested the 50 days moving average for a couple of days here again, and eventually broke down, finding support at the 100 days moving average before going back higher. And the last time it tested the 50-day moving average, it broke past both the 50 days and the 100 days moving average and found support at the 150 days moving average before reversing back higher. So moving averages can be very helpful in finding key support and resistance levels in stock charts. And for the last type of support and resistance, it is a bit unique and slightly different from the earlier few. You will notice that sometimes when support or resistance levels are broken, they can become the opposite. So when a support level is broken, the support level can become the resistance level, and when the resistance level is broken, it can become the support level. So take for example this chart of Disney. From the chart, you can see that Disney has a support level at around $41. The support level was tested a total of 3 times, and on the third time, it struggled to hold this support level, and prices eventually broke down. The stock went lower and eventually rebounded back up. It tried to break past this $41 level, which was originally the support level, but it got rejected, and the stock reversed back downwards and went even lower. So you can see that in this case, the original support level of around $41 was broken, and it eventually became the resistance level. So another example would be the chart of Bank of America. From the chart, you can see that Bank of America has a resistance level of around $47. The resistance level was tested about 5 times, and on the 5th try, the level was broken. The stock price went higher and eventually retraced back. It hit the $47 region again, which was originally the resistance level, and rebounded way back up higher. So the $47 region, which was originally a strong resistance level, eventually became the support level. So this type of support and resistance can happen not just for horizontal lines, you can also find them with trend lines and moving averages as well. So that's it. These are the 4 types of support and resistance. If you're new to investing, be sure to also check out my earlier video on how to identify good stocks for long-term investing. Thanks for watching.